What's going on, everybody? It's Jeff here. Welcome back to the channel. Citadel has calls for AMC. They've got puts against AMC. They're going long on the stock. The 13Fs that came out yesterday. I want to clarify everything that is going on for you guys and also talk about that June 2nd date. All right, so stick around. You're not going to want to miss this, guys. For those of you that are new to the channel, all I ask that you hit that like button and subscribe to join the family. Let's get rocking in the video. First off, guys, we are off to a hard short today. Ever since pre-market, we had 7 green days in a row. We are down just 10 cents, and we are going to be pushing for that 8th green day. If you cannot see the MACD, but you can see the RSI is getting a little bit on the oversold, guys. Just to give you a comparison too, if we scroll over here and look at GameStop, it is completely following the same pattern. All right, guys, let's jump over to what I want to talk to you guys about today, the AMC institutional ownership. This is something that I've been following for a long period of time, and I have said to you guys that there's an old rule, an old saying in the stock market of follow the money. That did come around before, all right, the power of the internet and social media. However, it does still stand true today. So if you guys have noticed, okay, and we could jump over here to Fintel. If you notice all of these 13F filings that had been released on the 17th, it shows a lot of bullish activity, all right, and some selling, but a lot of bullish activity. But a lot of you guys have said, oh, well, all of this happened on the 17th. Well, there's a reason for that, okay? So first thing being is, even if you go up onto Investopedia and just say, what is the 13F? You can see it says at the top, February 15th, May 15th, August 15th, and November 15th are very important days. The reason being is because these reports have to be filed no more than 45 days after the end of the quarter, and it's known as the 13F filings. So this talks about and shows all of their positions that were taken, okay, whether they were added or they sold, whatever they did in the first quarter. So if you look at this a little bit closer, that's why you're seeing a lot of action on the 17th, because it really doesn't provide them much benefit to be able to post these earlier. Because you got to think about this. Most of these hedge funds are not like Cathie Wood, where they immediately go out and buy 25 million shares of Palantir and want to talk about it right away, because last year Cathie Wood was one of the most, or had an amazing year, and everybody would just immediately follow him. Kind of reminds me of, like Elon Musk and Dogecoin, where all of a sudden he tweets Doge to the moon and then it skyrockets. That's not what a lot of these small hedge funds, they don't have that influence, have that power. So they want to keep their positions to themselves. Even if you scroll through it, the average share price is around that $6 mark. Okay, you continue to scroll. It's all around that $6 mark. You've got some more. There's right here at that $13 mark. But if you jump over to where exactly AMC stands, okay, and this is what I'd said to you guys, we're talking about this for a while. We jumped over to the 90-day chart. You can see, well, let's see where we're scrolling back. In February, that's where you're going to see that $6 mark. We've never come close to that. And if you follow me for a long period of time, I told you that 550 support was an insanely strong support, especially because this was going to be played as a reopening play. So keep in mind, guys, some of these 13 filings, these 13F filings, they could have changed their positions. Now, I do know that hedge funds, when you're moving this amount of money, okay, and these big blocks of shares, they don't get moved very quickly. When they take a position, like I've talked about in other of my videos, they have conviction on their position. They're not going to take a position at 611, it goes down to 606, and they automatically sell. But some of these hedge funds can easily be out of their positions as of now. And when you look up here and it shows Citadel right here that has a call, I think you scroll up even more and it says Citadel has a put right here. Scroll up even further and they are long on their position. Guys, this is very normal. This is known as hedging your position. I'm sure you've heard of it before, but maybe you've never done it. If you've been following me for a little while, or if you're a part of our private community, I talk about this all the time, ways to hedge your portfolio, whether it's taking new positions, playing both sides, running vertical spreads, iron condors, whatever it is, to be able to kind of help minimize and mitigate your risk. If you've been following me for a long time, you know that I am very bold on mitigating your risk, especially because it's easy to outpace the market during a bull market. The NASDAQ runs up 40%, anybody could have, had a portfolio go up 70, 80%. However, when the NASDAQ goes down 10%, it's hard to make sure your portfolio goes down less than 10%. So this is very normal. Do I believe that Citadel has all of a sudden just switched, tables and gone long on this stock? No, they definitely are abusing in the money call options. We've talked about that before. You jump over to bar chart, guys. You've seen me cover this numerous times. You jump over to bar chart. There was a lot of options activity going on for AMC. It's sitting at number one today. It's at about a 70-30 put ratio. And there was a lot of speculation that they were abusing in the money call options. And that's where some of the DTCC rule filings with the SEC were set to come in place to try to help mitigate this. I'd covered it on my channel before. We're still waiting. 801 had been passed. We're still waiting for that contingency 002, which I believe we have until June 21st to be able to cover that. Okay, so it's very normal for them to happen, and don't hold this, like I said, keep this very, very soft. I'm sure a lot of these hedge funds still have these positions because inevitably a lot of them are only going to be about 45 to 60 days late. But think about this too, from their perspective, okay, and I'm just being very, very honest with you guys. If they got in at 617, it's already run over 100%. I mean, that's a home run. Outside of AMC, if I had other stocks in my portfolio, which I do, if something runs 100%, especially within a month or 2 months, I'm out of it because only the greedy ones get left holding the bag. I've learned that. I've ridden the mountain up, and then you ride it all the way down, and you never sell because you think it can keep going higher. I've made those mistakes numerous times, and I'm comfortable with my gains. So I'm sure some of them did get out of it. But inevitably, what I mean by all of this, guys, is it's very normal for these hedge funds to hedge their positions. And it could be nothing better for us to eventually to keep Citadel shorting this stock because they're running out of their options. Okay, they're literally out of their options. But now they're running out of their opportunity roads to take to be able to get themselves out of the mess that they're in. Okay, so last thing I want to talk about before we wrap up this quick video on this Tuesday morning, guys, is that June 2nd. There's a little bit of speculation saying they're going to let the price run up before June 2nd, letting you think that there's a squeeze before you sell. If you've rocked with this stock for the past 2 months, for the last month, for the last few weeks, you've been convicted, it would be beneficial, I think, for us to at least hold until that June 2nd date to see what arises from that shareholder recount. This was supposed to happen back in early May. Okay, I think it was the 4th. They released the earnings on the 6th. They were supposed to have the meeting on the 4th. That never happened. It was pushed back. There's reasons behind it, whether it's all publicized to us or known to us. There's reasons behind this. I've covered this on my channel numerous times about the SEC really starting to have to crack down on this because of the amount of publicity, and spotlight that is now on what is happening. They don't want to lose their validity and their credibility for international money to be coming into the outside market. So keep an eye out for that June 2nd date, guys. I mean, we're looking at it's the 18th right now. We're right around the corner. So keep that in mind. And like I said, guys, these 13F filings are definitely bullish for us. Like I said, positions can change quickly. So I just wanted to bring that up for you guys. Let me know in the comments down below, and I'll see you in the next one.